get right into it. For a long time, if you heard terms like ESG or green finance, you might have just rolled your eyes. Dismissed them as buzzwords, something for a niche crowd. But that's not the world we live in anymore. What was once kind of on the fringe is now becoming a core part of how global finance works. It's shaping policy, it's shaping regulations, and it's deciding where trillions of dollars are going to go. So that brings us to the big question, and I'm sure it's on a lot of your minds. Is this all just talk? Is ESG just another corporate buzzword that's going to fade away in a couple of years? It's a totally fair question, and it gets right to the heart of what's really going on here. And the short answer? Not anymore. See, the most important thing to get your head around is that this isn't really about feelings or politics. It's about finance, doing what finance always does, adapting to new kinds of risk. That's the core idea we're going to unpack. How money and markets are literally evolving to price in the new realities of our world. So here's our game plan. We'll start with the Green Finance Toolkit, just to make sure we're all speaking the same language. Then we'll look at the powerful forces that are making this whole thing grow so fast. We'll also get real about the risks and challenges, because there definitely are some. And finally, we'll see what it all means for how our future gets funded. Okay, first up, the Green Finance Toolkit. Let's break down the key terms at the center of this whole conversation. No jargon allowed. So, what on earth is ESG? Well, it stands for environmental, social, and governance. But honestly, the label isn't the important part. What it is, fundamentally, is a risk framework. It's not a crystal ball designed to tell you what a stock will do next quarter. Instead, think of it like a new set of glasses that helps investors see and put a price on long-term risks that the old financial models just weren't built to see. And what kind of risks are we talking about? Well, they're becoming less abstract and more real every single year. Just think about it for a second. Extreme weather, that causes huge disruptions to supply chains. The shift to new energy sources, that creates volatility in energy prices. More frequent natural disasters, that means insurance premiums are going through the roof, and our basic infrastructure is looking more and more vulnerable. You see, at a certain point, ignoring these things is just bad business. And that leads us directly to green finance. So if ESG is the new lens for seeing these risks, then you can think of green finance as the action plan. It's the actual process of directing money or capital towards the projects that are built for this new reality. And let's be clear, this isn't charity. It's a calculated, strategic decision to invest in areas that are positioned for long-term growth, like renewable energy or climate-resilient infrastructure. A perfect example of this is the green bond. Now, check this out. At first glance, a green bond and a regular traditional bond look pretty much the same. Same kinds of issuers, governments, big companies. The mechanism is identical. You lend the money, they pay you interest, and eventually you get your original investment back. But the game changer is that last row, use of proceeds. With a traditional bond, your money just goes into a big general pot. With a green bond, your money is specifically tagged or earmarked for a project like a new wind farm or a solar park. So, why should you, as an investor, care? Well, putting aside any personal values for a moment, the financial argument is actually pretty strong. These bonds tend to offer predictable, stable returns, and they often have lower volatility. But the really big one is that they give you direct, measurable exposure to the climate transition, which, by the way, is a multi-trillion-dollar economic shift that's already happening. Okay, so that brings us to our next big question. We have the tools, we know what they are, but why now? What's lighting the fire under this whole thing and turning it from a small idea into a mainstream movement? Well, it's not just one thing. It's really the convergence of three massive forces, all pushing in the same direction. It's creating this powerful flywheel effect, and it's gaining momentum pretty much every day. First, you've got policy. Governments around the world are setting the new rules of the road. Things like the EU Green Deal aren't just suggestions. They're massive frameworks designed to steer over €1 trillion in investment. Second, the institutions. We're talking about the giant pension funds, the huge insurance companies. These guys manage staggering amounts of money, and they have to think in decades, not just financial quarters. So for them, long-term risk management is everything. And third, there's demand. It's coming from everyday investors, from people like you and me, who are asking for their savings to be aligned with the kind of future they actually want to live in. When policy, big money, and public demand all point in the same direction, well, that's how you get a powerful, long-lasting trend. But of course, it's not a perfect fairy tale. And to have a real conversation about this, we have to talk about the challenges and the very real limitations that exist right now. So let's just ask it straight up. Is green finance some kind of perfect silver bullet solution to all our environmental problems? The honest answer is no, not yet.
there are some pretty significant hurdles that still need to be cleared.
Maybe the biggest challenge is a word you've probably heard: greenwashing. This is basically when companies talk a big game about being environmentally friendly, but their actions don't really back it up. Then there's the problem of inconsistent standards. There's no single global rulebook for what green actually means, which makes it hard to compare apples to apples. And finally, it's just really, really hard to accurately measure and put a dollar value on environmental impact. These are tough nuts to crack, and the industry is actively working on them. And this brings us right back to the central idea. This quote, I think, just captures the essence of this whole shift perfectly. At the end of the day, the rise of green finance isn't really a moral crusade about being good. It's a pragmatic, dollars and cents response from the financial world about being prepared for a future where these new risks are simply undeniable. So let's pull it all together in our final section: how the future is funded. What does all this really mean for where the money is going to flow in the years and decades to come?
Here's the most crucial point to take away from all this. This isn't about choosing a political side. It's not about picking winners and losers based on some ideology. It's about recognizing a deep, structural change in how the market itself is learning to evaluate risk and spot opportunity.
So for anyone who's watching the markets, there are a few key takeaways. First, you've got to pay attention to how government policy is directing the flow of money. It's an incredibly powerful force. Second, it's so important to see this as a long-term structural change, not just another short-term fad. And third, it means you have to look beyond all the noisy day-to-day headlines to see the much bigger picture that's taking shape.
And this quote just says it all, doesn't it? Green finance isn't a buzzword anymore. It's not a trend. It is simply the market's rational, logical response to a new reality. A reality where environmental risk has, without a doubt, become financial risk. And that right there is a fundamental shift that's already well underway.